some stuff. Okay. So the deliverable one, I don't mind if you give it to me on Tuesday. I mean, sorry, Monday. You know, or later, you know, Friday. I don't care, just as long as it's complete and it's good. Okay. I don't want you like slapping stuff together. I'd rather have you do a good job on it. The stock exchange fact sheets, I think I've gone over those with everybody so you can benchmark it and calculate the basis point spread against the MSCI index. What I would do for the bond fact sheets is use the stock fact sheets and swap out the stock exchange metrics for the bond market metrics. And then if you, you can use, I would use the, since you've already done it on your quiz, I would just add in, because you've already got the yield curve on the stock exchange fact sheet, just use the spread between the country yield curve and the U.S. and give you the basis points. You've already done it. It was already on the quiz. Okay. I would be interested if you had any information on the yield spreads, the spreads between the sovereign yield curve and the corporate yield curve in the country, because that'll give you the credit default risk premium, the liquidity risk premium, and the maturity risk premiums. And you can see the differential between the risk-free yield curve and the corporate yield curve. And the assumption should be that in a lot of these countries, if they've been under sovereign debt or corporate debt distress, their yields on their corporates compared to the U.S. risk-free rate and the yields on the corporates and their risk-free are going to be pretty high. Okay, like Spain and Greece and Italy, you would expect some yield premiums over the U.S. interest rates, but definitely over, let's say, the EU yield curve. So I'm really interested in seeing what the risk premiums are on those fixed income securities across the yield curve. Also in your deliverable, actually it should be deliverable too. In your deliverable 2, can you reprint out the passive portfolio with the memo and the worksheets, the back tests, and then the PowerPoint presentation 3 per page with the notes, staple it together. I want to make sure that product is so just resubmit it to me with the edits.
Where do you want that in the portfolio?
I would stick that behind the number 2 question, the fund of funds. So okay. I can look at the portfolios together. So I'd look at the fund of funds and then I'd look at the passive portfolio.
Makes sense.
Okay. So trying to group those together. And then the midterm exam questions. Give me your in-class notes, either in Blue Book or the notes that you took, particularly on the foreign exchange presentation, the Institutional Research Foundations for Emerging Securities and Real Estate Capital Markets. Give me your chapter presentations that you did. Did everybody do their presentations? Team 8, is Team 8 here? Do you remember what team you were? Team 8? No? Team 7? Okay. Did you guys do chapter 16? No. Okay. And then team 6? You guys did chapter 15?
Yeah.
Okay, cool. And then team 5, you did 14?
Yes.
Okay. And then team 4, you did 13?
Yeah.
Okay, cool. So really you guys need to do, I guess, yours. Right?
Next Friday?
Huh?
Is that next Friday?
Yeah, I'm doing it on Friday. Okay. And I would want to wrap up, all of the chapter presentations next Friday. Okay. And I have it here on the list. Okay. And then deliverable 3 will be the global memos. I really want to look at those and make sure that those are really clean. so that when I sign off on them, you can print them out in color, staple them together, and use them as writing samples. And then the midterm questions, there'll only be 2 of them. There's going to be the global bond portfolio. Maybe Ken, you can pass these around. So it's basically the same thing that you did for the stock portfolio, but now you're going to print out the iShares bond ETFs, okay, or the bond mutual funds. And you're going to reconstruct a bond portfolio now. You can use the same countries that you used before, you can use the same factors, but now instead of a stock portfolio, you're doing a bond portfolio. Okay? Same mechanics, it's just, you know, instead of stocks, you're doing bonds. Okay? So what I'm trying to do is leverage a lot of the stuff that you've already done so far, particularly the stock market fact sheets can now be transferred over and leveraged for the bond markets, and now you can use the same approach that you did for the fund of funds, you use it for the bond portfolio, so it should take you less time to do that. And then the homeworks, I think there's only like, I don't know, 4 or something questions for homework 3, so it's really small. If you're trading in the CME platform, I haven't really focused on that, but if you've started some of the trades, just to play with it, show me the trade report, just print out some of those trades. And then the intrinsic stock valuation report. I sent you Mason's template. Thanks for sending that, Mason. I think it's a really good template, and I kind of moved stuff around a little bit, and changed it just a little bit, just to kind of clean it up. So I think that's a really good template to use. Again, if you took 123, you should be able to move through that pretty quickly to gather the info. And then what I would do is maybe on Monday, you know, come in with a determination of what cash flow metric you want to use. Can you use EPS, or do you have to use EBITDA per share? And then maybe come up with a 2020. We'll use 2020, 21, 22, 23, 24 as the holding period for the DCF. But you're going to have to grow out the cash flow metric 1 more year to calculate the terminal value, and then discount that back at some sensitivity discount rates. Okay, and for some of you who, we went through that, right? So you know how to do I'll go through it again, like on Monday. I'll walk through, if you guys already do some preliminary research on your banks, I can use that as an example and walk through the discount rate determination using CAPM, WAC, and the expected return on the market. And then from that sets the discount rates. And then if we go ahead and make the projections on, let's say you're using earnings per share, we're already in 19, so you're going to need to forecast 2020. We'll use 2020 to apply the discount rates to get the valuation sensitivities for perpetuity, Gordon growth. The multiple approach, you'll have to do some research, maybe look at some peer group multiples last year, this year, and then next year, and then come up with a range of multiples to apply to the ETF, the earnings per share for 2020. And then if you go ahead and do the projections for the 6 years going out, then you can run the valuations sensitivities using the different discount rates under the DCF model. And you can use the same weights for the 3 scenarios that you used before. Calculate the intrinsic values across the 3 scenarios, pick the one in the middle, compare it against the current stock price, give the recommendation, and show us the derivative trades or the trades. And then make sure that you have all of your references. And then the last page on the presentation I would like is to have your name, your title, your credentials, CFA, CPA, PhD, MBA, you know, whatever it is, you know, you want. And then put ideally you would, for the final presentation, the one that you're going to print out and give me binded, you should have a line above your name and a date, and you sign it and you date it. Okay, you sign and date the presentation. Because you're going to be, Mary L's going to be, you know, as a CPA, CFO, you're going to be signing off on all that stuff. If you're CFA, you're signing off on that stuff. So if you're producing any research, you're going to have to sign off on it. Okay, and I always have a signature page, you know, at the Then, I'll get into some other stuff in a minute. And then the white paper, I found a couple, did I pass around some examples of the white papers? Yeah, these are a couple, I found a couple more, these are actually pretty good too. You want to take some pictures of it. It's a really good format. I think what's only missing, let me see the next page after that. Yeah, what I would have on these reports is right after the first page, I would have one more page and I would have the abstract. You know, the major takeaway should be like right there, right? And then you have your outline. You have the abstract here. I would rather have it like right after the cover page. So if I'm an executive or a board of directors or senior manager, I just flip that first page and boom, I read the abstract. And then I can flip through the report or read it or whatever. So I know exactly what it is you did, what was the problem you were researching, what were the results of your research, and the recommendation on how to monetize the research based on some kind of either investment recommendation or some kind of policy recommendation. Okay. We're going to do probably at some point over the next couple of weeks, we'll do a case study. It's kind of funny. Ben Lentz, you guys remember Ben? Anybody know Ben? Yeah. Ben was like, you got to get rid of Lufthansa. It's like, don't do the case study. It's like, it's just a waste of time. You know, it's distracting. And then I talked to Riley Jackson. Does anybody know Riley? He was at the alumni event the other day. You know, he works for a recruiting firm. Does corporate recruiting for a really large tech recruiting firm. He said, oh yeah, Professor Susan, I got a funny story. Some guy came in, and one of my bosses came in and said, we just got the Lufthansa case account. And he said, do you know anybody who knows anything about the Lufthansa case, or knows about Lufthansa? And he just started spieling everything about Lufthansa. So now he's the account manager for Lufthansa doing the recruiting. So you never know where this stuff's going to lead you. So he's making money off the case. So I'll go over that. It's the same approach. And actually, this case study, who's going to grad school? Okay. So what you're going to be doing in grad school is you're going to be doing, probably doing Harvard case study. Harvard case studies are the Harvard case study approach. You do a lot of case studies. When you go to Harvard, that's all you do is case studies. And all the top Ivy Leagues really focus on, you know, cases. Okay. So this, what I did with this Lufthansa case, this is the reason why I'm doing this stuff, so you can get an idea of the level in which you're going to have to be operating at when you go to grad school. So this is basically the case study format. So this is the Harvard case study approach. Okay, I don't have the actual case here, but I do have the write-up. So it's very thorough, you know, in stating the problem, the proposed solution, recommendations, implementation strategies, talking about the case study, really dissecting the corporate structure and the competitive market analysis. But this is the standard, okay, for all cases, so you may want to take a look at this. And then what I'll do is I'll go through it, and again, it's kind of a take-home component. Okay? It's really more of an extra credit type of thing. But if anybody's serious about grad school, you probably want to work through it. Okay. All right. And then the chapter presentations, we can do those next Friday. Team 9 will do chapter 18, Team 1, chapter 19, Team 2, chapter 20, and then Team 3, 21, and then we're done. Okay. Again, don't make them really long presentations. Keep them to, you know, 10 minutes, you know, max. Just hit on the high points, walk us through, you know, give us the major takeaways. Okay. And then your resume. I'm going to need your resume again. Okay. And then if you want me to, if your resumes have already gone through Mary Beth, you probably want to show them to me and spend at least 5 minutes with me so I can walk you through how to create the value add metrics based on the jobs that you've had, and even if you just had on-campus jobs. Just within 5 minutes, I can help you manufacture some volume or value metrics that then you can stick into the resume and bold those so that when the reviewer skims your resume, they focus right in on the value add metrics, and that's what you're talking about in the interview. Okay, and you're going to walk them through how you actually came up with those calculations. Was anybody not here Monday or Wednesday? Anybody not here? Okay, you guys need to come up and take pictures of these PowerPoint presentations. I already sent you a PowerPoint presentation from Mason that you're going to use as a template, but you may want to look at these. I already walked the class through these, but I would start doing the research so we can do some preliminary evaluations, and I can check your evaluations so that your evaluations aren't messed up as you go to production on the report. And then the following, after next week, we'll come in, wrap up, the deliverables and stuff, and then also work with you on wrapping up the valuations. We'll do the valuation presentations. So whenever you're ready to do the presentation, okay, on the deck, or on the presentation. The other thing that I'm going to do on Monday is I'm going to present, probably spend some time on business government relations. If you're doing anything globally, you got to understand the institutional structures of the dynamics between politics and economic actors in those countries. That's really, in my view, the hardest part, the most challenging part in going global is really understanding the institutional dynamics between the government and business. And if you can understand, if you have some kind of business government relation, institutional analytical skills, again, you're operating at basically the graduate or the executive level, because that's what we talk about at that level. First thing we do before we go into a country is we analyze the political and economic dynamics between government and the sectors of the economy and the relationship between large businesses and government. The institutional structures are different based on the country that you go into. So Asia's different than Latin America, and United States is different than Europe, particularly Germany, and you really need to understand those institutional dynamics. And what's really important now to understand, because I've been approached by the Chinese government multiple times to come speak to them about how do you create and incubate startup companies within your economy, and what is the role of government in actually developing not only the talent and the labor pool, but what's the relationship between labor, research and educational institutions, companies, and then how do you create incubator environments to spur product and technological innovation within the economies. We take it for granted here because we're in the Bay Area, but our model is very different than what it's like in Germany or Paris or China, and that's what I'm going to be really focusing on. So this paper, again, I wrote this paper in my doctorate program, which really lays out some of the dynamics between business government relations. And then my lecture on Monday will be more, I'll go over some of this stuff, but I'll really be focusing on the institutional foundations for incubation to create a culture of startup companies, and how do you harness them, and how does really federal, state, and local governments create environments and incentives to be able to create that entrepreneurial spirit in those technology companies. So everybody's trying to replicate Silicon Valley's success, but their approach is going to be different based on their culture and the relationship between business and governments. So I'll lecture on that. I'll do a presentation on that on Monday. So you got the global bond portfolio worksheet, correct? Right, does everybody have that? I passed it around. Okay, the business government relations. We have examples of the valuation. T9, are you here? T9, HSBC. Are you guys HSBC?
For the bank?
Yeah.
No, we're Unicredit.
Oh, are you? Okay.
Yeah.
Okay. This HSBC just announced today their earnings and was really good. So they're a really good bank. So if you're having problems with your bank, you may want to consider swapping out to HSBC if you want to, because it's a really good bank. Okay. And then what I'll do is I'll cap the business government relations piece. That's really an institutional top-down analysis. And then what I'll do next week, too, even though I'm not going to be here on Wednesday, but I do want to do a lecture on currencies. Not only we've touched on currency valuations and currency valuation models, but I want to do more of a bottom-up approach to currency trading and show you and walk you through how you would actually trade these currencies, or how you would actually trade currencies. Some of you might be going into the foreign exchange desk at some major money center bank, and either you're going to be a trader or you're going to be a strategist, or both. So that's a great area to go into. It's really exciting, but I think we should spend some time walking through more of the technical aspects of trading currencies. Okay. I'm going to go around now and check your stuff if you have any problems. I can walk you through some of the stuff if you're stuck on anything. I can evaluate if you have a draft or just you're putting together your deliverable. I can kind of walk through it and make sure it's in order, check the quality. And again, if you're stressed or pressured for time or concerned about the quality of the product, I would rather give you the time to put together a really solid product as opposed to just handing it in and having me evaluate it. I'd rather evaluate it when it's really, really good, not just put together. Okay? I'd rather see an awesome product. Because again, I want you to use the deliverables, and you should get the deliverables back from me, okay, as soon as possible so that you can use them as examples of a portfolio of work that you've constructed that you can show potential employers. And it does get you jobs, okay? The deliverable packages will get you the jobs, okay? Because a lot of the Berkeley guys don't do that stuff, okay? Not everybody puts together these products.